Hi there. This is a year 2 topic video on the slowdown in global trade. Take a look at this chart from the World Trade Organization. This is their annual publication of trade trends, and look in particular at the blue bit of the chart. The blue bit shows the annual growth of world trade in goods and services, and it collapsed in 2009 during the recession year. Indeed, it fell by 12% in 1 year. Recovered pretty strongly the year afterwards, which is good news. Since then, the growth of world trade, shown in blue, has been well below the average from 1990 to 2014. From 1990 to 2014, world trade grew on average by just over 5%. But we've yet to see anything like that in the last 5 or 6 years. The growth of the world economy, of course, has been pretty slow as well, about 3%, although big variations within it. The key point we're focusing on here, though, is why has world trade growth slowed down? This data, of course, reinforces the point. Since 2010, trade has grown by only 3.3% per year. The world economy has grown by 2.5% per year. So why has trade growth possibly slowed down? Here are a few suggested reasons. Firstly, the big economies have been struggling to recover from the global financial crisis. Some economists argue that Western nations, among them countries such as Japan and perhaps the United States and the UK, are suffering from secular stagnation. That the new normal growth rate is going to be slower than before, perhaps hovering around 2%. We know, for example, the European Union, the Eurozone in particular, has been struggling to grow. Many countries have had a deep recession. So rich countries, often the driver of trade in the world economy, they've been struggling. Second point is that the impetus to the growth of world trade from the rapid industrialization of many Asian economies seems to be fading. So, for example, the Chinese economy is slowing down, now below 7%, and that's had a significant effect on the demand and the price of, for example, many commodities around the world. Another factor is that the pace of trade liberalisation, which is the process of opening up markets, seems to have slowed down. Most of the major cuts in tariffs in the world economy have probably already happened, and there are marginal gains to be made in terms of free trade agreements between countries. But there's been a failure in many ways to achieve a global trade deal. Instead we've had more of a patchwork quilt of bilateral trade deals, which isn't quite the same thing. Point 4 is important. Average tariffs have come down, but we've seen a significant increase in non-tariff barriers in the world economy, particularly since 2008 to 2009. Regional trade blocs, including ASEAN, have become more common in the world economy rather than the prospect of a truly global trade deal encompassing all countries. So to many economists, globalization is being replaced by regionalization, the emergence of regional trading blocs, and lots of bilateral trade deals. For example, the EU now has more than 30 trade agreements with countries including Colombia and South Korea. The number of regional trade agreements has risen from around 70 25 years ago to over 300 now. But the global trade deal is a long way off. And the fifth point is that the world's getting richer. Per capita incomes are increasing. There's been a substantial fall in extreme poverty. And typically as people become richer, particularly as they become middle income consumers, they tend to spend a higher proportion of their income on services. The income elasticity of demand for education, leisure activities and healthcare, for example, is quite strongly positive. Now at the moment, global trade in services is much lower as a share of GDP than global trade in manufactured goods such as kettles and cars and computers. So as we shift our demand towards services, we might expect to see at the moment a slowdown in trade. That of course requires countries to open up their service sectors, including, for example, retail and telecoms. Why is world trade growing slowly? One reason is the growth of non-tariff barriers. This is a really important aspect of trade in the world economy. A non-tariff barrier, or an NTB, is a trade barrier other than an import tariff. It could be an import quota, it could be an export subsidy or a domestic subsidy, it could be local content laws or discriminatory behaviour by governments. You can see from the two charts here that the number of protectionist measures, non-tariff barriers, export taxes and restrictions, for example, have gone up so too the number of discriminatory subsidies, market distorting subsidies introduced by national governments. So we have a world in which world trade is slowing down, in part because although tariffs have fallen, tariffs have come down, non-tariff barriers have become more common. Indeed, they have proliferated in many countries. So these are some of the reasons behind the slowdown in the growth of world trade. Thank you.